It is, I would say, criminal if you're not saving 40% of your income.
90% of the UAE population living paycheck to paycheck.
Very few people actually take a real benefit, which is tax-free income.
How can this person achieve financial freedom?
Financial freedom is that where my passive income equal as my expenses.
No point where we actually taught how to handle money. Financial education is non-existent. We earn and then we destroy the money that we earn.
Sometimes CFOs as well, managing money for their companies, but they're not able to manage money for themselves. A mistake that people do, their net worth tied to one single property or their home, which is a disaster.
How you can mitigate this risk by
Invest in something which is producing cash flow.
what is cash flow? About 90% of the UAE population is actually based on expats. And ironically, about 90% of those people are living paycheck to paycheck. And more ironically, they come here for better financial future. And ideally, financial freedom should be the end game in this context for vast majority of people. Why do you think these people are living paycheck to paycheck?
Eventually, we found some time to have this conversation.
True.
And for the point that you've made, it's actually very true, and people don't realize that until it's sometimes very late, they become complacent. Very few people actually take a real benefit of this country, which it offers, which is tax-free income. What I think for them is they have never thought of this country as this opportunity that they can enable themselves to be really financially free. What we as an expat, especially from South Asia, do is maximum that we send money back home to, let's say, India, Pakistan, or wherever we're coming from, and then they build properties there. Always give this one example that, let's say, if you're coming from Canada, and let's say if you're making there around $70,000 or $100,000, somewhere in that line, you will be paying around 30% tax or 35% tax, and in some cases 45% tax as well. Because until you tax yourself, until that time, you will not be financially free, or you only have yourself to be blamed on.
I think I trace the root of this problem to financial education. At no point in our lives
Yes.
were we actually taught how to handle money. You're not taught on the actual implication of how your math is going to help you during the lifetime. You're taught accounting in accounting schools, but you're not taught how to actually make money and then grow
Multiply
that.
it.
Financial education is non-existent basically in the schools, and it's very ironic once again that none of the schools at the moment are focusing on this, and we struggle in our practical lives. We come here to earn, we earn, and then we destroy the money that we earn without having any thought put towards growing it towards our financial freedom.
But what should I tell those people who are coming as chartered accountants, as finance MBAs, having great degrees in finance? Because I'm now dealing with a lot of people who are having these kind of portfolios.
I learned this from one of the most famous books of all times, Rich Dad Poor Dad. It is something that puts money in your pocket, and liability is something that takes away money from your pocket. They can't tell this difference, and this basic difference actually helps you put your money on the right thing, where it is going to help you grow. A lot of people don't understand cash flow. So if I have that income, I don't know how to manage it. I don't know how to create my budget. And it goes out, I don't know where I'm spending. I'm spending it on a car, which is kind of a liability, right? Can you shed some light on what is cash flow?
So the number one wealth killer in the US right now is your car. So I always tell people, whoever want to invest, I tell them, if you're new to investing, invest in something which is producing cash flow. Don't go for assets which are going to give you some kind of return maybe 5 years down the line, 10 years down the line. I remember vividly that when I invested my first dollar into stocks, and then when I received first dividend, I didn't know that how dividends work. But when I received that dividend, it was really something which is, I cannot explain, because I get interest income as well. But for asset which is giving you cash flow, which is giving you return, the asset price itself is increasing, and it's also giving you cash flows.
You want to reach a point where even if you don't work, the income from the investments that you've done, the passive income that you're drawing, should be more than the income that is coming from your day job.